Hey everybody, it's Jeff back with another weekly installment of the Silver and Gold Market Update. This is as of March 12th. And again, in these videos, I wanted to create a weekly track record of both physical premiums, the paper markets, and most importantly, the hedge fund positions. And there have been some very interesting moves by the hedge funds. They've been heavy sellers. And this is definitely the chart of the day. And what this chart shows, the blue line goes all the way back to September of 2018. That was really when gold was at its low, around $1,100 an ounce, right before we started the great bull run all the way up to the peak in 2020. The orangish line there is gold. As you can see, it pretty much was on a steady increase. But what's interesting, actually, the gold funds peaked their position and then kind of maintain that long, really from middle of 2019 all the way through early 2020. And they started to sell off when gold was maybe 2/3 of the way up the rally, which means actual true gold interest and demand for physical is what took us up that final leg up to the peak. And a lot of retail traders came in too. The retail traders don't show. These are just gold funds, which are the massive hedge funds and banks that trade in our market. But what's interesting is you notice the blue line, this is the lowest the fund length has been really since all the way back in 2019. And that is interesting in my opinion. The fact that gold has only sold off as much as it has is very telling. And I'm going to show you what's happened this week that makes me extremely bullish gold. I personally bought some of the gold ETF this week because I think we're seeing a bottom in the gold paper prices. So let's jump to the next chart. And again, if you watched this last week, you'll notice I mentioned gold was trading almost tick for tick with the Nasdaq. And this is what happened in March of 2020 when the whole stock market just fell apart, and so did gold and so did silver. That when the markets get extremely volatile, gold and silver move one for one with equities. And we've been having a very weird equity market where the Dow Jones has moved higher, yet the Nasdaq, the big tech side of the stock market, has been taking a beating. They've had a decent week this week, but the volatility is ramped up. This blue line is the gold ETF, and the green and red line is the Nasdaq. And you notice, if you actually look at some of the dips and valleys and rallies, is that gold and Nasdaq look like almost an identical chart. So in a weird way, temporarily, gold is kind of moving at the whims of the Nasdaq. Why this is the case? Because a lot of these big hedge funds were also long a lot of the big tech stocks that have done so well over the last 12 to 14 months that are doing quite poorly over the last 2 to 4 weeks. And as those sell off hard, these funds need to raise money, and they've been selling gold, selling their gold length pretty steadily, as that last chart implied. I don't think this correlation will last all that much longer, but I think it's interesting in the short period. And then the biggest headache for gold is Bitcoin, because as everybody says on the media, Bitcoin's the new gold, Bitcoin's the internet gold, all those variations. The inflation hedge is now Bitcoin. Again, it's simply because it keeps going higher, and gold temporarily keeps going down. So you think of new money, and they're probably wondering, why should I invest in gold when Bitcoin does seemingly nothing but go higher and gold is struggling? Now, I think gold is providing an incredibly great setup here. Risk adjusted, I think it's way better in Bitcoin. But heck, I don't own any Bitcoin, so I guess maybe I'm just a grumpy bear that missed out on it. But as you can see, this chart since January of mid-January 2021, so really just year to date, and Bitcoin's up quite a bit and gold's down. So the key factors affecting the metal market is definitely volatility in the equities, Bitcoin's continued rise and the funds selling. Jumping to silver, the week over week, and this is where, as a silver stacker, I want you guys to seek out opportunities. The more you watch these videos, at times you'll spot incredibly good opportunities. If you're a silver stacker that you buy, let's say, a little bit every month, but you see an opportunity, maybe you buy more that month. Or if you see an opportunity to sell, maybe you sell some or just don't buy it that particular month. And the most interesting part of this chart is the silver spot you see went up 70 cents, but you scroll your eyes to the right, the hedge fund position continued to sell off. As a commodity trader full time, the most bullish setup I can see is when the funds are liquidating, yet the spot or futures price actually turns higher. That is a really, really good sign. And as you can see, the premiums have been relatively flat since the great short squeeze back in late January. They have drifted just a smidge lower, but the fact they're able to maintain that level is obviously a sign, in my opinion, that physical silver is scarce, and therefore there's nothing flooding the market. Looking at the silver chart, the chart itself is just average right now. It did break that trend line, which is why the funds continue to liquidate, but it's held 25, and honestly, it's just kind of in a choppy range here. If we could somehow break back above that trend line, that's a really bullish sign as well. So we'll have to watch that closely. Looking at the dollar index, this is a very important chart for metals because as the dollar goes higher, gold and silver almost always go lower. And as the dollar goes lower, they almost always go higher. It doesn't always work that way, but that's certainly a big underlying factor. And we have seen the gold or the dollar finally take a leg lower. We had that brief rally for about the first half of March here, the last 2 weeks. And a lot of that was just simply because it became such a crowded short trade that some people had to get squeezed out. But the real fundamentals are proving that as we just passed in our stimulus, clearly we're just printing dollars. The dollar has to go lower. Now, the one contrarian point to that is Europe, which is a big factor in the dollar index, is going to start their own printing presses. And if they print money at a faster clip than the United States, even though both currencies might be devalued, the euro might kind of go down on its own, which actually could be short-term supportive to the dollar. So we'll have to keep an eye on the European stimulus plans as well. So the key factors affecting silver, physical market premiums are, in my opinion, still, you could argue both neutral and bullish. It's bullish because it's still an $11 premium for American Silver Eagles. But the fact that it's maintained that, it's not going higher. If anything, it's drifted just a smidge lower. I'd probably just call it neutral at the moment. The hedge fund positions, I think, are now finally showing their sign of being bullish. They've liquidated quite a bit of their length in both silver and gold, especially gold. And then you could see the dollar index, I think, is finally turning a little bit bullish, and the charts are just neutral right now. Looking at the gold week over week, this was probably the most bullish setup I've seen in a very long time on the gold paper prices. As you can see at the very bottom, they actually went up $26. This doesn't include the midweek break below 1700. It felt like a big washout trade. It traded sharply lower. I think the funds liquidated heavy on that sell-off. As you can see, they are down to 30,000 length. And this is down from 96,000 just since January 29th. And the peak length of the gold funds was over 200,000 contracts. So and this was back in late 2019, early 2020 at that first chart I showed. So they've liquidated 85% of their length here. Now they have gone short gold in the past, so it's certainly not foolproof. It's not like they go to zero and can never buy. But the fact that they've liquidated 85% of their length and the physical supply and demand of gold is still bullish, and we're finally seeing actual gold spot prices bottom and catch a bid despite the fund liquidation is why I bought gold this week. I'd love to buy physical gold, but the premiums are still very difficult to swallow. So I went with just the gold ETF, but I think any gold acquisitions will probably be a good one. Looking at the gold paper chart, again, this was kind of that washout low, as you could see below 1700, and we bottomed nicely. Those horizontal lines, the bottom one is the 50% retracements from the ultimate low about 3 years ago to the ultimate high in 2020. Moving halfway back is that kind of 1625 range. We didn't quite get there, but as you can see, we broke 1700. The top horizontal line is just kind of a key area of support and resistance. If we could somehow break back above that, you can actually see the funds reverse course and maybe start buying again, but we shall see. So to sum up the gold, I'm quite bullish. As you can see, I think physical market premiums are still supportive, even though they did take a small tick back this week. They're still proving that the actual physical supply is limited. The hedge fund positions, I think, are finally turning bullish, and the fact they've liquidated so much. The dollar index is short-term bullish, but you got to watch Europe and their stimulus and money printing. And the charts, I think, personally, are turning bullish, especially if we can break back above 1765. So that's all I have. Thank you for watching. Take care.